Professor, I have to talk to you about ESG briefly. You wrote an op-ed in the Wall Street Journal a few weeks ago. You said it was entitled, "Sustainable Investing is a Self-Defeating Strategy." Love that title. Where you went on to criticize ESG, saying, among other things, the scores are dramatically different depending on which ESG you look at, which is true. Could you tell us briefly, what is your concern about ESG?
Well, my concern is that companies are very complicated, and it's impossible to say what's a good company and what isn't. There are various services that give companies ESG scores. And when you look at the pairs of these raters, they're correlated. The correlation is about 0.4. But they're also, that means that there's tremendous disagreement among the ESG raters. And just to put the 0.4 in perspective, for bond ratings, the correlation between Moody's and Standard & Poor's in bond ratings is 0.99. That's where the rating really means something. 0.4 means that some raters would think that some company is great, another rater will think some company is poor. The utility that burns coal now, that one rater thinks is absolutely to be totally avoided, but that utility is making huge investments in wind power, and another rater says these guys are really good and they've promised to be carbon free in a couple of decades. Who's right? We don't know who's right. And then when you look at the ETF portfolios that are broad-based ESG portfolios, look at the top 10 stocks. And are you really going to feel good about owning them? What are they? Well, Facebook is typically in the top 10. Visa and MasterCard are in the top 10. So should I be happy owning Facebook, where there are problems of personal privacy, where there's problems of misinformation and disinformation? Should I be happy owning Visa and MasterCard that charge interest rates to poor people of 20% or more? I don't know. I don't look at those ETF portfolios and feel terribly good about it. If you want to be an ESG investor, I say have the core of your portfolio a broad-based index fund, and then if you want to go and invest in renewable energy, then either buy companies or an ETF that's a pure renewable energy company. But don't buy a broad-based ETF that is supposedly a great moral way to do good things for everybody and make money, because you're fooling yourself if either that the companies are all good, and you're fooling yourself if you think you're going to make more money that way.
You're a big proponent of that, what I call the 10% rule. You've said this before with other things. So if people have a sudden itch to think that they're great stock pickers all of a sudden, fine. Take 10% of your income and go and play around with it, but keep the rest in the low-cost index funds. It's almost like a 10% rule you're espousing. You said almost the same thing with ESG. If you feel bit strongly about renewable investing, then take a little bit of your money and do it, but keep most of it in index funds. Is that a fair characterization of the way you feel about it?
Fair. I'm not saying that you shouldn't stray and buy other things. You can do so with much less risk if the core of your portfolio, your serious money, is indexed. I'm actually, this will surprise you, but even Jim Cramer has come to the realization. He used to say that index funds were terrible. Now he says, put your serious money into an index fund, and then take your mad money, which is the name of his show, and you can put it in individual stocks. You can put it into factor ETFs. You can put it into an ETF that has a particular mandate. And I myself, I've got my serious retirement money entirely indexed, And then I'll buy individual stocks and I'll buy individual ETFs because I can do so with much less risk because the core of my portfolio is indexed.
Dave, how should, just to end this ESG conversation, how should we look at ESGs? Is it kind of a factor investing? Is it a separate asset class? I mean, what do you advise people who want to have a diversified portfolio? I'm trying to figure out what's the right way to look at ESG. What is it?
Well, one thing that Professor Malkiel is absolutely right on is that no two people really can even agree on what we mean when we're talking about ESG. For one person, it's about climate change. For another person, it's about regulatory compliance. And I think the reality is you have to go into an ESG investment with your own definition. What is important to you? And certain components of ESG, particularly things around governance, for instance, have actually proven to be excellent risk management metrics. And there are whole portfolios that are really focused on that G in ESG that have done quite well. And, McKinsey just published a study saying roughly 63% of the studies done on ESG portfolios suggest there's net positive impact on performance. So I don't think it's true you have to think about this as a thing you're giving up. I think ESG considerations are becoming part of how major institutions allocate trillions of dollars, and therefore to ignore it entirely is to potentially put yourself in front of a steamroller. So whether you believe in ESG or not, it exists, and a ton of money is chasing it, and therefore it's going to impact securities prices. So you've got to be paying attention.
Thank you, Dave. Very good summation, as you always do. We're going to continue this conversation with Professor Malkiel a little bit on the history of the random walk. You might be wondering, why are we spending all this time talking about random walks and efficient market hypothesis, and what the heck are these people talking about? This is the foundation upon which the concept of index investing is based upon. It's the theoretical foundation. It's the academic foundation for the whole thing. So if you're going to do this kind of investing and you're thinking, well, why am I buying an index? There's a reason why. And Professor Malkiel, Eugene Fama, and others have historically been very involved in this discussion. And A Random Walk is now in its 12th edition. And it's a very important book. It had a big impact on me when I read it 25 years ago.